Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, June 23rd. Mike Boutros with you on the horn. Hey, Gary, great to see you. Aurelian, Jay, Pete, Ted, good morning to everyone here in the room. So, lots to discuss. We are getting some nice volatility finally with this move, bringing DXY down. So we'll hit the DXY first, Euro with the breakout, Sterling, dollar CAD turning lower off resistance, dollar yen, dollar peso, SPX, Kiwi to move higher, dollar Swiss, Aussie, and we will wrap it up with gold. Any other questions or trade setups, as always, feel free to throw them on the message board at any time. Let's jump right in, guys. There's so much to look at here. Here is DXY. Here's what it looked like yesterday. Before we even get into that, I just want to highlight this beautiful weekly chart. Guys, we've been following these same slopes um, for essentially like 3 years now. They've been working really well. We got the rebound off support a couple weeks back at 95.62, confluence upslope support and 50% right there. Nice rebound. We talked about it right yesterday. The focus this week is on this key range, 618, the yearly range for 2020, and the objective 2020 yearly open. We're right here. We turned just ahead of that 97.83 key resistance, and now we're heading right back into yearly support at 96.50. Pay attention here. Watch the weekly close. Also bring your attention to weekly momentum, which has been drag lining here at 40 for quite some time. Watch the close here. If we were to get a close sub 96.50 with momentum sub 40, that'd be the first momentum break sub 40 since 2018. Back here. Let me just move this over. Right? So you can see the significance of where price is trading and how important it is to really be mindful of the weekly close. Here's the daily chart. So monthly open right here, slam lower, buckle below this 97.87, 97.84, that key resistance zone. Even dragged and closed one day below the yearly open before quickly popping higher. This is a second day decline. You saw a quick rally, got rejected in overnight trade. You saw the same thing in the SPX, guys. Apparently, Peter Navarro yesterday came out and essentially suggested that the China trade deal may be offline, basically, that they may have dished the deal because of everything that's going on. Markets tanked. You saw in futures, it was like a 400-point drop in the Dow. We got a couple of subsequent tweets from him and from President Trump, basically coming out and quelling market concerns, saying that the trade deal is on as of now, and that kind of alleviated the concerns. It's crazy how markets are just reacting to tweet by tweet basis. But in any event, that kind of gives us that rally that we saw in overnight in the dollar, that spike lower that we saw in SPX in overnight. But largely speaking, man, we're heading in some pretty big support. Okay, so still 96.44 into 96.50. It's going to be the objective yearly open, 786 of the yearly range. Watch that. A soft target I'd have on the downside if that breaks for the daily chart. I didn't have noted. It was the low day close. So something like that would be your first target, right? The 96 handle. Here's what it looks like on the intraday chart. Morning, Michael. Sorry, I am late as always. Out of my head. No worries, man. Great to see you in the room as always. Here's the intraday chart. Super clean, guys. Super clean. So we were talking about this again last night. Here's what it looked like. We had a nice little upslope in play off of the monthly lows. It was a 3-point touch if you count this as 2 or 3 right here, but we broke. And you saw the accelerated drop yesterday. We hovered around that 38.2 for a while. That was 96.97. That broke. Next downside target key zone, again, 96.44, 96.50 yearly open. It's also the 618 of this near-term rally, right? So on the daily chart, we just highlighted that level as also being the 786 of the entire yearly rally, right? And the yearly open. On the near-term charts, it's the 618 of just this near-term rally. So beautiful spot. Look for a reaction there, 96.44, 96.50 into US trade. Initial resistance at 97, I'd put bearish inval. You know, I'd want to say 97.45, but to be safe, you have to leave it basically against the opening range highs for the week, this zone here for bearish inval. So a little bit far off, but the initial move looks good. Now, if we break and close below 96.44, it keeps the focus lower. 96.15, just a soft target. The big next zone of support is where we turned ahead of just here on this last decline in early June, a couple weeks back, right? 95.61, 2019 low day close comes in at 95.55. Nice support zone there. But for now, the focus is all on this. Former swing lows, pivot in price, objectively speaking, resistance, breach, support, right? Support. That's this level right here. Look for reaction there today. Jay is saying the audio is down. Can I get confirmation, guys, that you can still hear me? Is it just a problem with Jay's computer, or is it an issue all around? Sound is all good. Gary, Pete, Eman, perfect for me. Okay, Jay says it's good now. No worries, Jay. Sorry, I thought I saw that delayed. All right, so that's DXY rather. Look for near-term support here into the U.S. Open. Here's number one. Number two, Euro breakouts. Here's Euro dollar. Let's go really quick back to where we were on the weekly chart. So here's Euro on the longer term picture. Remember, again, big zone of resistance at basic 38.2. This is of the entire 2018 drop. Okay, we tried to peg it earlier in the March rally. Here it is again on a closed basis. Can't even get near it. Jackknife lower here. Last week we closed right at this key zone. Again, like these longer term charts with these zones that we've been watching for super long. 1168, 1167 rather into 1187. Big zone. Okay, it's the 618 of the rally off the low from 2017. It's the 618 of this year's decline from the highs. Nice pivot zone in price. They got the highs from December, the highs from October. Really nice level. Came into it, we closed there. Here's the start of this week. So we're not out of the woods yet. Momentum hasn't breached 60 yet. And just like 40 on the downside in DXY, 60 on the upside here in Euro hasn't been tested again since 2018. Keep that in mind. 1320 on a weekly basis is what we need to clear on Euro. Here's what it looks like on the intraday. Pretty clean. 618 retracement of the near-term decline. Oh, excuse me. 618 retracement of the near-term decline just off the highs puts the 1325 level again in focus. We're testing that right now. 3-point resistance break here on this move. Here's your first level. Second level is 1369. That same 38.2 that we were looking at earlier in the month on the ascent. That's also the high day close. We closed exactly at 1330. I'm sorry, 1372. 1369 is the level, right? Same zone. Same zone. Intraday. I guess there's not much else to look at here. Here's what it looks like. So again, that 618 is right there, 1325. We're hitting that now. You have upslope resistance there as well. Here's what the chart looked like last night. Here's that congestion region we were looking at, 1265, 38.2. You had slope resistance. Wanted to watch out for some hesitation there. Constructive while above this near-term highlighted support confluence. I think I noted 1220. We marked a low at 1233. Here's the rip higher, breakout, first level of resistance. We're there now. Okay, so look for a reaction here into the US Open. Could get some kickback, initial support back at 1265. Bullish inval, I'd like to raise to 1239. So while above the December Open, I'd like this to stay constructive. You have some swing lows there. You obviously the December high, and you have slope. So I'd like to see that hold. Obviously, you would need to see a pivot below here to shift the focus lower. That's the objective weekly range lows. But even if that happens, do you remember the three zones we talked about? 1167, 1186, first one, the 100 off the high, two equal legs would have taken to 1140s. and then the objective monthly open. All three of these zones were problematic for us, and we were looking for an exhaustion low off one of them. I guess this is probably it. And if that's the case, we should find support ahead of December high. Next upside stretch, 1369 and 14. Obviously, look at 14 as a round number, guys. The big figures obviously will tend to be decent targets in general. Hesitation zones, pivot zones, what have you. This is the big zone, 1440s, 1437. Questions on euro. Again, as far as the data front's concerned, there's really not much until we get into durable goods. That's on the 25th, so we've got a couple days before that. But and then the big data, obviously, I told you guys yesterday also, is core PCE, the Fed's preferred inflationary gauge, personal consumption expenditures on Friday. Probably the biggest market move for the day for the week from a data standpoint. Questions on euro. Number 2. All right. So you see the result here in euro. Sterling, however, is showing a bit more hesitation. So yesterday we highlighted in pound. We were basically looking for a stretch and a reaction to this 38.2 retracement, just like we did in this euro, right? Euro breached this 38.2 at 1265. You saw an accelerated pop. It's exactly what you want to see, specifically when it converges on downtrend resistance, which is what this was doing yesterday in the pound. But we didn't get the breakout. Here's pound. In fact, this thing came right into resistance and held. So we actually spiked a high into 25.13. The retracement's at 25.16. Here's the jackknife. Key zone of our key range is still in focus here. So 124.33 support, 125.16 still resistance. Pay attention to a breakout of this zone. Really, if you get this breach here, it should be like euro. Okay, we'd want to see an accelerated pop on account of downtrend resistance, the 38.2, what have you. Now, there's something to be said about trades when you get these non-confirmation highs, we call them, right? So either or non-confirmation lows, either a stretch into a new high or a breakout in related assets, and you don't see that when reflected in the other. So with this happening in sterling, gives me a little concern, right? I mean, I'm still waiting for the breach. I still favor the breakout, but definitely a little bit more hesitation now on account of this pullback here. But the levels are unchanged. Okay, we need to breach 25.16 to get the quote unquote breakout mode, right? To get the larger move. 25.93, 26.30 are initial targets on the upside right here. But till we do, resistance is resistance. So a little bit less conviction here on sterling, especially on the account of the fact that you saw the dollar come off versus a lot of its major counterparts, right? Gold's trading higher, Aussie's trading higher, Kiwi's trading higher. I mean, sterling unable to make that press oftentimes tells you the laggard like that, you want to be careful. So curbing my expectations here. If we get the breakout and the punch through 25, great. Till we do, I'm a little bit more hesitant on this one. Haven't taken any positioning. Key support zone is still 27 into 23.58. This is still critical support. You got the monthly open. You got 2 equal legs off the high. It's the 100% extension. You got the 618 off the low. You guys know it's my favorite Fibonacci convergence areas. Here's the reaction. This is what we need to clear to validate the breakout and the turn in price. Questions on British pound? Number 3. All right, and the last but not least from last night was Loonie. So dollar CAD looked like this. And you know, you always want to be cautious with dollar CAD because it's been taking on abominatory features lately. The point was, yesterday was outside day reversal day. Right? You might have seen that. I had that as the commentary on the front of the report. It's just we saw so many outside day reversals: sterling, loonie, dollar index. which kind of gave us that conviction pump to kind of try to run with it. Here was dollar CAD yesterday, outside day reversal off of confluence resistance. So the zone that we had in focus was 36.02 into 36.40, bigger zone, but definitely a zone worth noting at the 2017 high day close. 618 retracement, 100% extension. Again, my favorite Fibonacci confluence is just like here on Sterling, it was resistance here on Looney. Here's what it looks like, or here's what it looked like on the daily chart. So you got that outside day reversal. Again, a quick reminder for anyone who's new to the room, outside day reversal takes out the previous day's highs, extremes, and covers the other extreme as well. So we took out the previous day's highs, reversed, closed, covered the outside, or covered the whole previous day's range. Typically a formation when it happens near resistance or at highs, that'll give you the conviction lower. On the downside or from the downside, typically to give you the reversal conviction. Long story short, it was off of a beautiful level. Again, 36 and 36.47, 100% extension off the high, 618 retracement off the low, 2017 high day close gives you that range resistance, which held, again, on a closed basis, like a charm. So the outside day reversal yesterday gives us that indication. Okay, let's see if this got any legs. Let's look lower. Well, the break happened, but it's not really getting us that run I wanted to see. So here's the intraday chart. Here's what it looked like last night. You got that break below 35.15, right? But then what happened? Then you got that commentary from Navarro. Things went haywire for a while, kind of washed everything out. And then here is the resumption. You're not getting the accelerated move though. The next major support zone is, guess what? My favorite fib confluence regions once again, 618 retracement off the low, 100% extension off the high. That's backed up very closely by the objective 2017 yearly open, decent pivot in price, 34.35. So 2 levels on the downside. I don't like the momentum here early in the session. I was soaking this out earlier right before the webinar. I kind of wish it was kind of giving us the accelerated pump again here, but look, at the end of the day, that's the key zone that you would need to break to validate sort of the next leg lower. All right. So watch out into this zone. For all intents and purposes, that's the key focus right now. Resistance, look at that overnight high. It converges on slope. That's the ideal resistance zone. Bearish invalidation still has to be at 36, 36.10. Guess what's there besides the 100% extension, besides the 618 retracement? It's also the objective weekly open. So that's going to have to be our bearish inval. Okay, beyond that, you're essentially risking 36.85. You're essentially risking the monthly open at 37.75. Not our favorite scenario, but that's the risk on the breach. So initial focus right now, immediately 34.35, 34.57. If we get down there, look for a reaction with the break lower needed to keep this short bias viable. You know, on a typical trade, if this was another currency, guys, or another asset, I'd be all over it, super excited, you know, with a lot more conviction. But it's dollar CAD. It's given us these false starts and then turnarounds like so many times that I'm a little bit more hesitant to put like a conviction bias on it. So that said, look for resistance out of that median line parallel if this is going to work. Key breakdown here needed for the next leg lower. Any questions on Looney? That's number 4. All right. Speaking of the abomination, here is dollar yen. And here's what dollar yen looked like earlier in the week. Real tight. I guess this was last week. We were trading in this real tight range, didn't really do much. 106.65, basically the former swing lows. We were just sitting on that support right into the close of the week. Here was last week's open. I left it on here for a reason. Looks like he made an opening range break here, went right to the previous week's lows, and that held. Okay, right into the close. Here's this week's start. Looks like it's going to make a pump fake higher, and here we are right down again. Is this going to be a real break, or is this going to be this? I'm of the mindset you look lower. You look to follow through to 106.31, look for a bigger reaction there. That's the 618 extension. Let me take a step back. Right here. Boom, 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 right? It's a test of the range lows for the month. It's like 106.30s. The abomination is on its way lower, or it's just setting me up. I feel, admittedly, just gut feeling that it's heading towards 106. So, Gary, I have that feeling with you. I'm always mindful of that feeling, but with dollar yen, um, you know, there's a reason it's got such an offensive hatred. I have such an offensive hatred for it. But yeah, if you put a pistol to my head, Gary, I'd be with you. You know, not 106 for the sake of it being 106, Gary. Specifically 106.10, the 2019 low day close, and 106.31, which is that 618 extension. I always keep all my levels are based on something technical. They're not just big figures, although you could make the case people have strategies just based on big figure trading. But anyway, you get the picture. The question with dollar yen though is not, is it going to make it to 106.30 or 106.10? It's how do you trade it? And for me, this ship has sailed. What are you going to put a stop against 107.30 and try to press a 70 pip stop? I'm not doing that. So look, ideal scenario on these types of trades where it's a runaway, the range is so tight, the stop that you'd have to put against any swing high is not viable, is you look for the recovery to give you conviction. So the first thing I would love to see on a move like this is if this does start to recover or teeters out ahead of 106.30, or even if it makes it into 106.30 and rebounds, the ideal scenario is that you find resistance at a weekly open. So here, right where we open the week, right? So maybe dribble down. If that were to find resistance or failure here, the move lower, stop against that high would have us targeting that 106.10 level. But from here, anything you do is just a sheer chase. You do not want to be chasing, especially not dollar yen. To be honest, I was just typing quick. I'm thinking 106.10 already. In at 107.07. Gary, my man, love the entries, love the kahunas. Awesome. Awesome. Yeah, 106.10. I'd be looking at those low day closes, man. They're so they're sort of sneaker cells, right? Sleeper cells. No one really pays attention to them as much, but a lot of times you get reversals, rebounds right at those low day closes. And that's also just not magic, guys. It's also a function of when you're looking at portfolio managers, longer term investors, they're watching line charts, they're watching closes. So as markets are approaching these closes, on a close chart or on a line chart, you don't even see that wick. That just looks like the low. So a lot of times you'll have limits or stops sitting there. A lot of times you'll have guys getting in or out there. It's just a psychological thing that tends to manifest itself in price action. Questions on dollar yen. A quick review of where dollar yen is on the weekly charts here early in the week. 106.45 we had labeled as the 50% of that advance off the yearly low. That's also exactly the open for this May weekly drop. So I kind of want to see, an accelerated move here if we're going to break lower. But we'll have to see. It's dollar yen. Just as a disclaimer, haven't touched this thing and probably won't for some while. We'll see what this thing does. Peso, number 6. Peso fever is hitting everyone. And here's what it looks like. Our chart's been on point, so it doesn't hurt. That advanced last week. Remember, we were watching this descending channel formation. Again, you can go through, guys, the updates and see how we've been performing on these kind of ancillary trades. Here's the descending channel, the breach, 618 retracement. We were looking for kind of failure, exhaustion ahead of that 22.80.73 zone. Okay, 618 extension off the low. You had slope resistance there, the works. Later, we highlighted, well, watch out, because there's the breakout. There's the 618. We're there now. Look for possible exhaustion, possible failure. That ended up being the high, pulling back, key support there. We had to remove that because we're no longer the weekly open. It's a new week. So the June open is still sort of the zone we're looking at, 22 14.95, 618 of this advance, 22 0257. That's kind of the breakdown zone. A break below this would put resumption right back into play. So coming right on up, the first thing I want to just highlight is that trend line, okay, is coming up ahead of this zone first. So you're testing that basically right now. So if you're holding shorts, watch that zone. You want to see a reaction there with accelerated drop taking you to 22 14.95, and 0257 would be the next major support zone you'd need to get through. Resistance now, you want to drop it to the weekly open. Okay, the 618 of that drop, you're still in that range, so I'd like to leave that 22.54.06, 57.99. You know, bearish inval, I'd have to drop to that 618. So initial resistance, bearish inval, downside targets on initial front. Keep a key focus here. Resumptive trade. Levels are pretty good. Here's the daily chart. Now, the one thing I do want to note, obviously, you know, this trend line is basically what you're looking at here on that intraday chart, right? Is what we're testing right now. That's what this would be right here. I guess I'll just draw it for you real quick. Right? The median line of the decline is there. Oh, this is what I want to say. The one thing that this could be doing, which I always want to be mindful of on these, you know, lower volume trades, is this could be setting up for real clean consolidation. In which case, you could be here for a couple more days before finally seeing the break. But the point being is putting more emphasis on this zone. If you can look on a closed basis, again, this thing has never cleared this key support. So that's the resumptive trade, is you need to break below 22 essentially. All right, so clean levels on the peso. We haven't gotten the breakout, but certainly testing near-term support right into the open of US trade. Watch for a reaction here for peso. All right, SPX number 7. Here is what Spoos is doing. So I left this on. I know this is messy. I left it on for a reason. I just wanted to highlight exactly, you know, what we tracked yesterday in the webinar. Here's what the update looked like, excuse me, into the close of last week. And again, the daily chart was really what I wanted to put on focus here, specifically because we were coming off of, or we were heading into, a level that we had talked about here in the room, 30.57. That's the objective monthly open, not Mike Boutros' opinion, not SB's opinion, fact. Guess what? We also had slope support there. Now, again, this slope looked like it had been compromised on this drop back on the 15th, but on a closed basis, can't even tell. Can't even tell. Look at that. Okay, that's respect of trendline support. So you got the reversal candle, you got the pro below, then a reversal candle yesterday, taking you through near-term downtrend resistance. So here's a pitchfork that we added yesterday in the webinar. Came off of lower parallel. We were trading right into the upper, right into that 75% line. Said look for a reaction there. Failure either here at this 4-hour reversal candle close or at the upper parallel. Hesitation. Last night's washout on Peter Navarro's comments. Breakout. Now you can scratch this. Now I just wanted to show you how that worked out, but still could be sort of near-term consolidation breakout. The January low, this pivot here at 31.81, that's still what I want to see to validate the breakout of this sort of ranging formation that we've been in. So we're not out of the woods yet. Could see some more upside. Obviously, we're poised to open higher here in the US. Intraday charts getting kind of jacked up, getting a little messy here. But if this is a false break of the consolidation lower, we should look for the continuation higher here to stretch towards that 31.81 level and look for resistance there. Questions on SPX? For all intents and purposes, this thing just came off upslope support, monthly open support. The onus is on the bulls to get us through this next swing high and the upswing. Any questions on the SPX levels? All right, number 8 is Kiwi. So another one where we had a real near-term downslope in play. That thing broke and ripped. Here's what Kiwi looked like last week. Okay, here was the daily chart. Ideal scenario, right? If we closed below 64.24, I was telling you guys, let's look for 63.20s. A basic 236 would be sweet. Former slope resistance on the daily chart, turn support would be sweet. Let's look for an exhaustion low there, right? Look what happened. You got that drop. We closed right there at that 64.24 level. The next day, we closed below it, gap lower into the Monday open, and then just rip higher. So we didn't quite clear the previous swing lows. Obviously, we didn't get that run to the 236. And yesterday was a massive outside reversal candle to the upside, okay, giving you an upside bias. Well, on the intraday chart, we had a near-term slope in here, which I'll show you in a moment, which broke to the upside, which again, even on the near-term focus, shifts it higher. Here's what the intraday chart looks like. Oh. Okay, obviously we've adjusted for the new weekly open, but you get the picture. There was that slope support, 2018 low. There was that false break, and even to the open, you slipped lower, gapped lower, and then just started to move higher since, right? So you've broken through. We've taken out this 65.06 barrier, which you're looking at right here was last week's open. We broke right through that right now. So what do? Do we stick with this, with this slope, or has this been invalidated now? I'm more inclined to kind of scratch this at this point, and just kind of focus on looking for a new upslope. Lateral levels remain unchanged, and that's the beauty of this setup. So all of these levels are completely lateral based. They're not based on slope. That gives you 65.41 is your next resistance zone. It's the 786 retracement. Key resistance, we just turned ahead of it on this last stretch, is still right here. The uncovered close, 66.07. 100% extension off the low, 66.28, right here from January. So look, I'm not calling the resumptive trade just yet. I do think you run into big trouble if you get up here, as there could be a really big choke point up there. You kind of need to plow through that. But initial focus right now, 65.41, initial resistance. Look for support ahead of 64.24 if this is going to head higher. Okay, it's a 2018 low. It's also these former swing lows right here. We made a nice pivot. But this is the big zone of resistance for Kiwi, just higher. Just want to see what this looks like. Bear with me one sec. Work with this slope. So remember I just told you 64.24 bullish and now even more conviction on that. It keeps all the same levels and focus on the upside. See if that holds. Okay, that's number 8. Number 9, here's dollar Swiss. So we made a rebound off of, or a reversal rather, off of downtrend resistance, right? So here is Swissy. Wasn't quite an outside reversal yesterday, but it was a pretty decent reversal candle nonetheless. Remember Swissy, we talked about key resistance last week, earlier in the month, 95.42 into 95.55 key zone. 50% retrace of the yearly advance, this whole year's range rather. 618 extension from the decline off the highs, really nice pivot zone. We came right into that, faltered, and we've been waiting for sort of a break of this multi-day consolidation, multi-week consolidation in price. Looks like we got it yesterday. Okay, so on the daily chart, just want to highlight major key lateral level and the downside from here is 94. 94.03 is the 100 off the high. Key resistance still 95.55. Here's what it looks like on the intraday. And here's what it looked like. Again, this is pretty messy, but I want to show you how it panned out. And here's what it looked like back here on the 17th. So we were talking about this test of resistance, consolidation in price. We want to see a break, but we did note that even if it breaks higher, you're still at risk while below this zone. So ultimately, we're looking for that move into 94, but we need to clear this consolidation. That consolidation continued to play out last week. Even until the Friday breakout, it broke. It seemed like it broke, but man, didn't give any play. No momentum pump, not even a 60 breach on intraday. Okay, start off this week, not too far from resistance, not too far from that key resistance of lateral threshold. Quick falter, break of that near-term consolidation for the upslope, and here it is. Drop into the 618, 94.57, got it. Even try to test it as resistance, looks like, over the last couple of hours. Next downside level, still going to be that 100% extension, 94.03. So let's adjust some of these targets now, clean up this chart. We can drop these little consolidation lines. Bearish inval, drops the weekly open, that's 95.15. Initial resistance, ideal scenario for initial resistance is here, but I push the threshold to here, okay? This swing low from last week. The 75% line, you know, the reason I'm a little hesitant with this parallel is because obviously we cleared the bottom with fervor, but you still saw pivots along that gradient on every break and test. So I'm going to still continue to work with this. That gives you resistance like 94.70s. Let's just call it 94.80 for comfort. And 94.03 is still going to be your key level on the downside you want to see hit. One other thing I wanted to consider was a near-term extension of this high. And that, ooh. One 618 is just below 94, okay, but the 100 is here. And that's another thing I wanted to pay attention to. I want to see this break. I don't want this to be two equal legs off the high, right? If we are going to see point in fact resumption of the downtrend. But yeah, let's just leave that 94.40 level on there for now. And work with these levels heading into the US trade session. Any questions on Swissy? Okay, number 10. And the list goes on, the beat goes on. Here's Aussie. So we probably should have covered this right after Kiwi. It's similar scenario, okay? Here's the top side break of descending channel resistance or descending trendline resistance. We haven't really gotten the formation break of the descending formation, generally speaking. We've been following off the monthly highs. So former swing highs right here, just ahead of 70. You know, that's kind of where I'd love to see the breach. You guys know I typically love Aussie, but it's one of those trades where kind of missed the entry, so kind of just a little bit resentful, and I haven't been tracking it as closely. But here's what it looks like. If I may admit, 67.74 was the February high. It was a really nice spot. Should have paid more attention. We got that nice candle right there with the bounce right off that level. The low there registered at 67.76, like literally 2 pips off. Here's the move higher, failure again. not really a fan of these moves. I don't know how to really approach them, right? We're still constructive Aussie longer term. This was a big level of resistance. We actually loved the short side, but here's how it started to teeter out. I don't know if this is a resumption or if this is just another range play under resistance. So from the weekly standpoint, the onus is still on a breach above this key zone with a breach above 16 momentum to kind of get this thing with a conviction break higher. Daily chart. The one thing you'd highlight in the daily chart, this is your high day. Excuse me. This is your high day close right here, which you're kind of punching through at 69.60. Bullish invalidation, weekly open. Near-term support, I'd mark down here. Watch this zone. Watch that zone. The issue is the resistance at 70, 30, 70, 42. So you guys know the July Open, the 2019 Open, that's what capped the advance right into the open of the month. That's my problem. If you mark 70 as the breakout, 40 pips higher, you have that key resistance zone. And that's my issue with this Aussie advance. Like since I don't have a good entry, it's too close to even try to press along with key resistance levels looming just higher. But these are the levels you need to beat to get resumption. Again, broader picture, I'm still constructive Aussie, but you need to get through this heavy lateral zone of resistance to get the resumptive move towards 72. So watch that. Any questions on Aussie? All right, last but not least, gold. So I'll be putting out a piece on daily effects here today on this. It's make or break. You guys have all seen the weekly chart on gold. You know exactly what we're trading, where we're trading. 1765 is just the objective swing high for the year. Nothing fancy. That objective swing high still converges on basic slope resistance, extending off the high that we made from 2017. It's the same parallels we've been working off of. Caught the highs, converges on that swing high at 1765 on the weekly chart. Ongoing divergence, by the way, in case that means anything to anyone. Here's the daily chart. Okay, 2020 high, 1765. Failed just ahead of that yesterday. That's the level to beat. We were looking at this pitchfork off the April, May highs, worked out pretty well, held for so many days, guys. Look at this. You cannot make this up. Take into a close to get the clearer picture. Clear break, acceleration. It's exactly what you want to see. That said, here's your first lateral level of resistance at the former objective swing high. So how do you trade this? What do you do? Is this going to be the resumptive breakout? Are we heading towards the highs or not, Mike? This is the hurdle that you need to look at. 1765. Here's the upslope on the intraday chart. So even if we take a much more granular look at this from the intraday chart, let me clean this up a little bit. Basic pitchfork off the low, high, low from the lows that we dropped right into the start of the month. Upper parallel resistance, resistance. A little messy on that lower end, but median line resistance, breakout, 75% line resistance, support at the median line, 75% line resistance, support at the median line, 75% line, converges on that 1765. That's the focus. Now, like I always tell you, these breaches, if this is a break, if 1765 is going to get tagged today, and if you do see the test and run through, you should see acceleration. If the cascade isn't up there with a whole bunch of stops, then it should rip, right? And the next level up is another 30 bucks into 1795. That said, the focus right now is on this $4 range just higher than 1765. If you're holding longs, I'd be taking a little off the table there, be bringing the stops to 1745 or above or below or just below, right? Here's the overnight lows. You had a 4-hour or 2-hour reversal candle right off that zone. Key pivot, former swing highs, Fibonacci considerations, the works, okay? The works. So a break below this would risk a bigger dump. Again, the high day close, the objective monthly open 1731. But the levels are pretty clear here on gold. It's make or break 1765 today. And that is number 11. Okay, any other questions or trade setups? Feel free to throw them on the message board. Mike wants to take a look at a bunch of Aussie and Kiwi crosses. So Aussie CAD. Ugh. Well, that setup we put together doesn't look like it held too long, did it, Mike? All right, could be a flag formation or channel formation, whatever you want to call it. The parallel takes us into resistance right here at 94. Obviously, the big level on the upside, Mike, is still going to be that 95.06 level, right? The 618, which converges on slope. But I got out early, so thanks anyway. Yeah, I got you, Mike. Yeah, I mean, Mike, at the end of the day, if this breaks any higher, you're looking for 95. You're looking for 95. It's either choke right here or 95. Do you know what I mean? Now, relative price action in Aussie and CAD, conversely, yeah, it gives this a little bit more of an upside tilt, and it is a constructive trade, broadly speaking. It's bullish, but you're at resistance right now, like heading into the US trade session. So if we breach 94 on the breakout, I think you're good for 95 tag, but look for a reaction here today. Does that make sense, Mike? Does that help? Oh, he says, okay, thanks. And Kiwi CAD, I thought I brought up a chart for you on that last week, no? Guess not. New Zealand CAD. Yeah, oh, that's our resistance, right? This is our resistance right now. So very similar scenario, uptrend resistance, 618 extension, okay? Or excuse me, this is a 618 retracement of the decline off the highs that we made back in 2019. Woo-wee! Yearly objective opening range high. This is huge. If Kiwi CAD breaks this, you're looking for an 80. You're looking for an 89 tag. Plain and simple, I think. All right, I don't want to focus on these, but This is pretty big. And conversely, you look at this, he says, okay, thanks, you did. I hope it will hold on this one. Yeah, I got you, Mike. The one thing you want to highlight here, A, is first of all, you have a multi-day range, right? Which looks like it gap lower, covered the whole range, and is taking the outside out. That would suggest that you have this thing poised for an outside weekly reversal. Now, the one thing we just talked about weekly outside reversals in this session, which is why I bring this up, but when you get an outside reversal higher into resistance, those are often exhaustion points, actually. So I'd be very cautious on this, Mike. Today's close is going to be paramount. The weekly close, this is the weekly chart, will be paramount. Above 89 is what you need to validate the breakout and resumption towards, excuse me, above 88 is what you need to mark resumption towards that 89 target. But this is pretty big. This is pretty big. Let's start with a daily close. That would feel pretty good. Obviously, you're marking ongoing divergence in momentum, so that further gives you that risk for exhaustion, right? Both on the momentum front, both on the fact that you're getting an outside weekly reversal higher into resistance. You want to pay attention here. You want to pay attention here. If you're holding longs, you're just kind of you're choking up your stops. Okay, you're just bringing your stops in the money and getting it higher and higher. You don't necessarily want to bail out per se, in case you do get the breakout. If you're looking for new positioning, you don't want to be jumping into new longs here. That's for sure. If you're looking to fight this, there is no conviction whatsoever to try to get on the short side here or try to take the counter trend yet. Maybe that will be the case, but that would start with a close failure below this zone today. You take a stop against the high. And with a little bit more of a shift in momentum. But certainly a very provocative and interesting stance here for Kiwi CAD midweek. Really hoping. Thanks. Thank you. Hey, you're more than welcome, Michael. Interesting pairs, man. Thanks for bringing these up. Keep them coming. Push me out of my comfort zone is always a good thing with trading. You never want to get too complacent. Any other questions or trade setups, guys? If not, we'll go ahead and wrap it up here. Again, you're out till data until 25th, so we'll be together for durable goods on Thursday. Watch these headlines. You know, I think the major thing that we want to focus on with the absence of data is really going to be this continued count that continues to pop all over the place with regards to the coronavirus spread. Markets seem to be taking it with a positive note. SPX, again, remember those levels, guys. Still looking for, you know, if this slope breaks, it's still going to be 3170, huge region of resistance. Watch for reaction up there. Best of luck trading. I'll see you guys on Thursday. Cheers.